let's get a conversation with a market expert now. Let's welcome Vineet Arora, the MD of NAV Capital, to discuss this and a lot more. NAV Capital is a Dubai-based leading wealth management advisory with over 100 plus team years of investing experience in Indian and global markets, and they do have sizable exposure to some of these mid-caps. They do some IPO funding as well, so we'll discuss that with the guest now. Mr. Arora, good afternoon. Thank you so much for joining us today. Well, the last time we had spoken, it was about SME stocks. Things have changed now. Things have changed for the mid-cap and the small caps as well. How are you analyzing the entire story when it comes to mid and small caps? Do you think it's time to book profits there, or the correction is done now?
Good afternoon. Thank you for having me here. Yeah, I think last time we spoke about SME and we did talk about froth in the market, and the same has been holding on in small cap and mid cap. As a fund, we've been sellers since beginning of Jan. Earlier, we were expecting some correction in Jan, but that didn't happen. It was a bit long overdue, but my sense is we are almost done. Index is down about 12 to 15% on an average if you look at small caps. But the index actually does not show the true picture. If you look at the broader market, some stocks are down 30, 40, 50%. So I think that is quite overdone. What will happen is the good stocks will bounce back, and the crap which was going up, which people were just buying because in the frenzy, that will come to a pause, and those will take a long time to recover.
Okay. Vineet, hi, welcome to the show. Well, I was just seeing a couple of your stocks in your portfolio, and some of them have done well from the broader markets. Case in point would be, say, like something like a Good Luck India, or even say a Tata Chemicals until the recent correction. Are you then booking profits within a couple of these stocks which have given massive returns, only to be a little more cautious when it comes to the broader markets?
Actually, some of these stocks we've taken, when Tata Chemicals fell about a couple of weeks, 10 days back, we actually added more, and we haven't sold any. The same holds for Good Luck. We've added actually twice in last 3 weeks. The company is having a CAGR of about 25%. It's still, to us, it's still underpriced, and the visibility is there for next couple of years. So we've added some of those stocks which we really like. But at the same time, where we felt that the stock has run up much faster than what we expected, and we've achieved our price targets a year down the line, those are the stocks we've booked some profits.
So which would those stocks be?
We did take part profit in Gujarat Fluoro. We did take part profit in EMS. We've sold some Concor. So some of those we've sold. But a lot of them we've added as well.
Okay. Vineet, before I ask you what you are looking at right now in terms of a good buying opportunity, can you give us a split of what your allocation looks like right now? Because the last conversation we had like a month back, it showed that it was 60% allocation to micro and small caps, 20% each to cash and pre-IPO stocks. Are you making changes to the allocation considering what we've seen in the market?
So cash, we continue to hold about 15% even now, although we've deployed some. Because the market is tight, we're getting some opportunities on good new IPOs which are coming in. We just participated in Crystal Integrated Services, Platinum Industries. So we've been deploying cash there. We have also deployed some cash in a couple of unlisted opportunities which are in the process of getting listed. Over the last couple of months, we have changed some allocations. We've deployed some towards large caps and mid caps and reduced our exposures to SME and micro caps. But that's been a conscious decision and a process. We've been, as I said, we've been continuous sellers since Jan, practically every day till last Monday. We've been selling some every day. At the same time, we've been buyers as well. But yeah, we've been taking some money off the table wherever the stocks have run up quite a lot.
Okay. So just wanted to understand, not that much of an exposure in large caps for your fund?
Not too much of large cap, and that will remain like that. We are value buyers, and we are always hunting for multi-baggers. That's the investment philosophy which drives us. And buying Infosys or TCS is not going to give me a multi-bagger from here on. We try and catch them when they're in the growth phase, a high growth phase. So we prefer mid cap, small cap stocks which have the potential to become, migrate from small caps to large caps and mid caps to large caps.
So Vineet, in that case, considering the markets that we are seeing right now, mid caps have fallen from the top, so have small caps. Is there any interesting opportunity that you're looking at right now? And considering the big fall that we saw, what would the idea be around valuations?
Valuation, I think, in general, India has always enjoyed a premium and that will continue. Some valuations have become quite attractive, especially in the small and mid cap space. Large caps have been unscathed largely, but small and mid cap, quite a few stocks have become attractive, and we are looking at adding some. As I said, to me, EFC looks quite attractive. EMS is decent, though we've taken some money off the table. Shakti Pumps looks very good to me. It's a turnaround story. Good Luck Industries looks attractive to me at this point. So there are quite a few stocks in our portfolio that we're kind of continuously tracking, and they look quite attractive, and we're continuously adding those.
Okay, just before we let you go, Vineet, what is the criteria that you look at when you're choosing these small caps as well as these micro caps in such a market?
So that's where I think we're quite different from the industry. If you look at the private markets, you can divide into broadly three parts: VC style funding, growth, and buyout. So we are in the growth sector. We typically look at companies which have not been backed by PE VC money, grown on a bootstrap model, great managements, growing faster than the industry growth rate, profitable, and have a very small market share in the respective business. And that's where you try and capture the alpha on those segments. But that's a broad take on it. Uh, Come with a PE mindset without any strings of PE. So we don't ask for a board seat, we don't interfere in the business. Uh, but we add value in terms of by opening up ecosystem of investee companies, wherein they can learn from each other, share the best practices, and grow together. That's the environment we've tried to create within our portfolio companies. And I think that's been the reason why we've been so successful over the last couple of years.